Well, speaking of earnings and guidance, with the big banks wrapping up a big week, the group reporting all their numbers for the most part, let's go to Wilfred Frost with the three big takeaways from the bank earnings that I guess we can gauge so far. Wilfred.
Hey, Brian. Good evening to you. So, number one, the biggest focus for the week has been the level of reserves the banks have taken against potential future loan losses. Here is Goldman's analysis of the amount of allowances banks have taken just this quarter compared to their entire loan book. Goldman Sachs notes the average of the big seven banks they cover is 2%, and the same measure peaked at 3.5% in the last recession in 2010. The second big takeaway, while there were different tones on the calls as to whether this would mark the peak of those provisions, which Bank of America and Goldman Sachs implied, or whether they could increase again next quarter, which JP Morgan and Wells Fargo implied, all the CEOs and CFOs seemed to agree that the economy had a huge uphill battle on its hands and would be unlikely, to open significantly anytime soon.
We all love to wish and to hope. I wish, I hope for a V. Do I expect a V? No, I don't. I mean, you can't have this kind of dislocation and expect people to bounce immediately. So your best case is some sort of U recovery. And I think, if I were a betting man, it's somewhere between a U and I guess an L. I think, it's through the end of next year. We're going to be working through this global recession.
So a rational plan to get back to work is a good thing to do. And hopefully it'll be sooner rather than later, but it won't be May. You're talking about June, July, August, something like that.
And the third point to note is that interest rates and their impact on net interest income expectations have also been key. In fact, the biggest daily declines in bank share prices this week came on Wednesday and Thursday, which were the 2 days that Treasury yields fell the most. If you look at week-to-date performance, the most interest rate-sensitive names have declined the most. Wells Fargo, the regionals, for example, declining much more than the investment banks, Morgan Stanley and Goldman Sachs. Regardless, it's not been a good week for the banks, but concerns over margin of profit you can make on interest rate-related products is clearly less severe a problem to have than fear your loan book is going to blow up. And that's really the key question now for banks investors. Do banks face an earnings problem? Bad, but not the end of the world if they do. Or do they face threats to their future with a balance sheet problem? The KBW Banks Index, down 40% year to date, suggests the market is still trying to work out between those two possible eventualities, Brian.
Wilfred Frost, a big week there for you as well, and a big week for the big banks. Wilfred, thank you very much. Let's take a closer look at kind of what Wilfred was talking about, the big price action specifically in JP Morgan Chase. You had lots of big down days, and then you had a huge up day today. Guy Adami, I can't remember seeing this kind of volatility in a name like JP Morgan Chase, but they seem to be telling different stories every day. What story do you buy?
I think a lot of people are struggling to try to figure out what banks are going to look like in 6 months. The story I buy is the story that we saw today, where people, I think, are trying to get their arms around it. And again, I am not some raging bull here in the market. I do think there's another turn to the downside. But with that said, JP Morgan came out and told us the tangible book for the company was basically $61, which is much better than I thought it was going to be. And at its peak, when JP Morgan was trading about 141, not that long ago, that stock was trading close to 2.3 times tangible book. Now, maybe we won't get back to those levels, but I think in reasonable to think we could get closer to 2, and you just do the math. I mean, you should be looking at, to me, at $115 to $120 stock. So I think people are trying to struggle with what the banks look like. But if you think JP Morgan is best in breed, and if you think they deserve that premium valuation, then you got to be looking at a stock, in my opinion, can rally 15% from here.
Yeah, 4, 3, 5, 4% down, 9% up. Crazy week for JP Morgan Chase. Guy Adami, thank you very much.